Zoom out a little bit. Really, there's nothing really to speak of in terms of inefficiencies except for what I've already highlighted, and that's over here. Okay, so on the upside, nothing really terribly exciting. There's a small little one in here, but to me, it just looks like it wants to go lower. We tried several times in here. We went above these equal highs here, and then one more time for good measure, and they swept it. So it depends on what we do on Sunday's opening and on Monday's trading. So we're waiting again to see what we get in terms of volatility or lack thereof, to see what we get. And on Eurodollar for SMT overlay, we had divergence in here on Friday. Nice little divergence during the London session. Failed higher high, lower low on cable, failed lower low on Eurodollar. And I mentioned we would see this as accumulation during the New York session on the 10th. The price popped up really nice there. And on the overlay for cable, I drew on the actual divergences so that we can see them. Failed higher high, lower low wasn't seen, just like the lower high was formed. So this is symmetrical, but watch, this is not symmetrical. Okay, so we have cable making a lower low while Eurodollar was making a higher low, and at the same time dollar index was already failing to go higher. So this is a run on stops. It's a sell stop run or a rate on sell stops. So anyone that was buying here or buying here, they get knocked out, and then the real move takes place, running up equal highs. So on this day here, the signal formed from the accumulation of sell stop raid, okay, or turtle soup, or external range liquidity, as you learn about it in the mentorship. And this is an internal range liquidity entry. External range liquidity entry here in New York, internal range liquidity entry on New York for Euro. Both moved up nicely. Both had really respectable runs. Looking at previous highs, do 10, 20 pip extensions on this the sweep, and you get all of the daily highs and lows pretty much. For charter members or those individuals that have gone thus far into the levels that talk about the central bank dealers range, flout, and Asian range deviations, you also would be encouraged to look at these levels here because it overlaps rather handsomely with them. And again, on Friday you can see the lower low on cable, not seen on Eurodollar as you expected. So now again, higher low, lower high, that's symmetrical, but that's not symmetrical. This is a run on stops. So when we see this, as soon as you see that, you have one of two choices. One, you can use the bullish order block or fair value gap entry on the Eurodollar, or you buy the sell stops as prices under the low here on cable, and you look for a run above a swing high for counterparty liquidity. In other words, if they're going to run the stops here, you're buying those sell stops, so to get out of that they want to sell it. Okay, so they're buying someone else's sell stop, they're getting knocked out of the trade, they want to go long, they've knocked them out. Their sell stops have been taken, so now smart money holds a long position. They want to sell it to be profitable like anybody else. So where would they sell it? At an area where known buyers would exist. Okay, right above here, buy stops would exist because those individuals that are short, their stop is going to rest up here. If they're short, they're protecting their position with a buy stop. So there's a willing pool of liquidity of buyers up here. So buying below this low and selling it above this high. Not just above this high, but at layered levels of liquidity. And that's when you do the extensions on or deviations on central bank dealers range, flout, and Asian range on this day, and you'll get this level here. And you'll also do the 10, 15, 20, 25 pip sweep protocol that we do for previous highs and previous lows. And that also will be rather handsome with this level as well. And that's going to be it, folks.